Do you want better trading results? Then you have to journal more effectively. You want to make detailed notes like these. I'm going to show you how you can do this in this video. Traditional journaling sees traders note down their entry, stop, and target levels to only forget about them at a later date. We need to understand why, when, how, and what to be able to journal more effectively. Why? Why did we get into the trade in the first place? Was it something to do with strength and weakness, or some kind of technical setup? When? What time did you enter the trade? Was it around a session open, or was it around a news event? How? How did you get into the trade? Was it a rejection of a previous high, or was it because of a particular chart pattern? And most importantly, what? What happened once you entered the trade? Did you exit too soon? If so, what happened after? Would price have hit your full targets, or would you have been stopped out anyway? These are really important steps to consider when journaling. Let's show how you can do this for yourself. First of all, we need to open a Google Sheet or an Excel spreadsheet. You can do this written as well if that's how you process your stats. So we're on the journal. This is something that I have created for myself. This is something that I use as one of my journals. I also have a paid journal service that I use as well. You can also download the free Blueberrymarkets journal as well. So it's up to you how you journal. I think this is a really effective way of how to do that. So I've got the legend here. The legend here is because I like to color code things. I think this is a better way to achieve the results that you want to achieve, right? So green is yes, bright green is yes, and then no is bright red. And then basically in the middle of that, I have different types of legends to be able to color code the rest of the journal, and it'll make sense in a moment. So let's head over to the journal. Now, I do this in a particular way because I use strength and weakness analysis and things like that in order to do that. So day and date, that's just basically what day am I looking at, what date I'm using. So let's say today it's the 20th of November as I'm filming this, so I could say it is the 20th, it is a Monday. So Monday, I like to note what day of the week that I'm doing a potential trade, 20th of November. Now, I like to do strength and weakness analysis as well. So let's say, for instance, that I'm looking at a euro US dollar. So what I would typically do is have a strong and weak column and then look to add what is strong, what is weak, okay? So I kind of separate that. So let's say the dollar was weak, euro and pound was strong. I would just come down here and say pound is a strong currency and the dollar's a weak currency. L/S, that just means long or short. What am I looking to do? Am I looking to get long? Am I looking to get short in the market? So I'm looking to get long, let's say, on both of these. Now, placed and triggered is something that I like to use as well. I want to know if I've placed an order, obviously, does it trigger? If it doesn't trigger, what happened to price, okay? That's something that I like to note down. And this comes back to the structure of the sort of how I got involved, when I got involved, why I've getting involved with the market. So I've already done the when and the why I'm getting into the market. That is with the tables and the currency strength meter. What is that telling me? Okay, then I've got the buy or sell orders, placed or triggered. So if I've placed an order, referring back to the legend, okay, so green is just yes. I'll just come in here and say yes, I've done that. Let's say it's triggered, right? Then you come to the how is it triggered? So this comes back to the legend again. So am I trading off a previous high? So if that's something that I'm looking to potentially get in on sell opportunities, am I coming off a low? Okay, so am I looking to buy it off a low? Has it been something to do with my moving average? Okay, that's the kind of three ways I like to kind of break down my trades from that point. Okay, so all I need to say is I am, let's just say, for instance, I'm long euro US dollar. Okay, what I need to do then is say that I've come off a low, okay, because that's how I've got into the move. Now, the rest of it is sort of what's happened next. So let's say the market has gone in favor of what I'm looking to do, okay, and it's hit TP. I can say, did it hit TP1? Yes, okay. Let's say it didn't hit TP2, okay. So then what I want to come to is what happened next. What happened after the fact, okay. I can say something in here like price hit oh, let me just, I'm on caps lock, sorry. Price hit TP1, but reversed, stopping second position at break even. The reason why I want to make notes like this is because of if there are common things happening within my trading, then I can just look at this and say, right, okay, that's a, I can pinpoint what's going on. So let's say this is completely different now, right? Let's say this is completely different. Let's say I've placed, I've triggered, I've come off the low, okay, and instead of stopped, I've closed it, okay. So let's say I've closed the position, and I'll say something like +5 pips, okay. So just put 5 pips in there, okay. The reason why I am putting this is because I'm saying that I've closed my position out, okay. We can say that it didn't hit TP1, so let's say it didn't hit TP1 and it didn't hit TP2. The reason why it didn't do that is because I closed it at +5 pips. Now I can say here, I closed my position, let's just say manually, okay. So let's say I closed my position manually, all right? And then let's say I come to pound and I had another situation where I had yes, yes. Let's say this time I got in on a moving average, okay. Let's say I did the same, but this time I came out for like an 8 pips profit, but maybe I was looking for TP1s at like 30, 40 pips. So for say, let's say, didn't do this again and say I closed manually, okay. Now what I'm doing here is I'm building a bigger picture of why am I closing this closing these things early. Is it something emotional inside of why I've closed things manually? The thing is as well, what we want to do when we've said I've closed it manually is we want to come back to it at a later date and said would, so I can come in and say would have hit TP1 and TP2, okay. And let's say that happens the exact same for this one, but maybe not obviously consecutively. Maybe it was for some reason it was on Tuesday, Wednesday, Thursday, whatever. I can see like color coded that I am closing my positions out too soon, and if it would have gone and hit TP1 and TP2, then I know that I should be holding my positions because they are good entries. I'm just managing the trades poorly from my side, okay. So hopefully that makes sense. This is how you can color code it to kind of give it a journal a little bit more effectively in your own trading. I think sometimes it can be easy just to do the date, the time, the entry stop targets, but the entry stop and targets don't really matter. They are dynamic. They are going to change with every type of currency pair. They're going to change with every day essentially if the market has moved a substantial way. So we don't really need to note those things. What's important is to note where we're going wrong, and that's why journaling is so important. But thanks for watching this video. I did hope you enjoyed it. Hit that subscribe button and I'll speak to you in the next one.